Welcome back to Round the Table with Gratz Park Private Wealth. Just want to give you a quick recap of the month of April. As you recall, starting into this month, we were at all-time highs for the S&P 500, had a really strong start to the year. So it wasn't surprising to see the first couple of weeks in April really bring us some showers and dampen the mood. It happens. We want the market to consolidate. It needs to digest all those wonderful returns we got in the first quarter, and also try to parse through the news that we continue to receive on the economy. And the main impact there is, when will the Fed begin cutting rates? That's the real anticipation. And what we saw in early April was the March CPI number, Consumer Price Index, and that inflation number was still showing a bit heated. The more preferred gauge that the Fed uses, which is the PCE index, personal consumption and expenditures, was showing some steadiness. It wasn't over the estimate, so it's showing some steadiness. The problem is it's not showing a downward trend line. So where we are right now is not suitable for the Fed. They would like to see it go from this 2.8% PCE index down to 2%. And we need to start seeing that downward trend line before we feel confident that they're going to make a cut. So I think that's got the market a little bit nervous, and that uncertainty of when that first cut will happen is going to create some volatility. We do believe still that we're going to see 1 to 2 cuts from the Fed this year. Our opinion was the first would begin in May. I think that's off the table now, and maybe it's going to be June or July before we see that first rate cut. That being said, the corporate earnings season has kicked off for first quarter earnings, and they've actually been pretty solid. Certainly have seen some misses, but for the most part, some strong numbers, with the economic data still being pretty solid as well, and showing that the economy is resilient, which should help those corporate earnings in the next few quarters as well. And then finally, don't forget, we've got an election coming up, and elections create uncertainty, and that creates volatility. And as many of you know, you've been investors for some time, summer months are much slower. We don't have as much volume, and so you can get exaggerated highs, you can get exaggerated lows, and that volatility will increase through those summer months because of this uncertainty of the Fed, the economy, and the election. But just hang on to your hat, because we still believe in our outlook that the market is going to finish in the high single digits, low double digits by the end of the year, and that we're in the early stages of a bull market. So let's just enjoy these May flowers since we got some good April showers, and stay invested.